Hi. Let's learn about green bonds. A green bond is a type of fixed income instrument specifically earmarked to raise money for climate and environmental projects. These bonds are typically asset-linked and backed by the issuing entity's balance sheet, so they usually carry the same credit rating as their issuer's other debt obligations. Dating back to the first decade of the 21st century, green bonds are sometimes referred to as climate bonds, but the two terms are not always synonymous. Green bonds are designated bonds intended to encourage sustainability and to support climate-related or other types of special environmental projects. They finance projects aimed at energy efficiency, pollution prevention, sustainable agriculture, fishery and forestry, the protection of aquatic and terrestrial ecosystems, clean transportation, clean water, and sustainable water management. Additionally, green bonds may come with tax incentives such as tax exemption and tax credits, making them a more attractive investment versus a comparable taxable bond. Green bond issuance has increased significantly over the years. In 2019, green issuances reached a record $266.5 billion. This growth has broadened the ability of retail investors to participate in green bond initiatives, with investment companies and asset management firms sponsoring green bond mutual funds or exchange-traded funds. The World Bank is a major issuer of green bonds and has used funds to support 111 projects around the world, largely in renewable energy, clean transportation, and agriculture. These projects have had a positive environmental impact, showcasing the potential of green bonds to drive impactful change. While all green bonds represent debt financing for an environmental project, the specific characteristics of each instrument may differ based on its issuer, what the proceeds are used for, and the recourse of bondholders to the issuer's assets in case of a liquidation, among other factors. There are numerous types of green bonds available on the market, each with its own unique attributes. Investments in green bonds often come from institutional investors, but there are also mutual funds and ETFs available for retail investors. These provide exposure to the green bond space and offer a way for individuals to align their fixed income portfolios with their environmental values. While ETFs are readily available to purchase through a brokerage account, retail investors who want to buy individual green bonds may face a few more complexities. Green bonds work like any other corporate or government bond, with borrowers issuing securities to secure financing for projects that will have a positive environmental impact. Investors who purchase these bonds can expect to make a profit as the bond matures, and there are often tax benefits for investing in green bonds. The issuance of green bonds reached $269.5 billion in 2020, with the United States leading in new issuances. The cumulative issuance of green bonds had reached more than $1 trillion, showcasing the significant growth of this market over the years. Blue bonds are sustainability bonds to finance projects that protect the ocean and related ecosystems, making them a subset of green bonds. While all blue bonds are green bonds, not all green bonds are blue bonds. The terms green bonds and climate bonds are sometimes used interchangeably, but some authorities use the latter term solely for projects focused on reducing carbon emissions or alleviating the effects of climate change. This highlights the specific focus of climate bonds compared to the broader category of green bonds. There is no universally recognized standard for determining the environmental friendliness of a bond, which can lead to marketing of debt instruments as green without a clear impact on the environment. This highlights the importance of verifying the sustainability claims made by bond issuers. Here are 4 key takeaways. 1. A green bond is a fixed income instrument designed to support specific climate-related or environmental projects. 2. Green bonds may come with tax incentives to enhance their attractiveness to some investors. 3. The phrase green bond is sometimes used interchangeably with climate bonds or sustainable bonds. 4. Green bonds are part of a larger trend in socially responsible and environmental, social, and governance (ESG) investing. Hope this would help. Thanks for watching.